Good evening, all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up, and this is for the evening of Wednesday, September 22nd, 2021, Fed Day. So we saw the Fed come out. We got the 1 o'clock announcement and the press conference, and let me give it to you in a simple order. Assuming that we get reasonable job data coming out first week of October for September, the Fed's going ahead in November and going to begin the tapering. It should last through mid-2022. They are looking at the dot plot, not the Fed, but they put out everything and the traders will look at it. They're flattening out the curve yield tonight. That was the initial reaction. Stock market was higher on it, as were a number of stocks throughout the day. That's it. So let's take a look and make some changes, all right? Let's look at Microsoft for a change. The first thing I'm looking at is without today, the market had a gap in the chart, and it went today to fill the gap. Is there a trend here? Well, if I look at it, the swing line has a higher high and a lower low. That isn't a trend. The market has been fighting a battle at the 18-day average for a very long period of time, and the market is caught in narrow Bollinger Bands. All right, no trend, caught in the Bollinger Bands. The bias is down since the market's under the 18-day average of closes, and momentum is pretty flat, trying to turn a bit up. Not much there. In Apple, we are still very much in lower highs, lower lows, with the market having hit the lower Bollinger Band and turned away. Remember what I teach you. The first time you hit Bollinger Bands and you're not embedded, pros typically take off their position. That's what I teach. Do I know if that's what they all do? Of course I don't know. But in my years of doing this, that's what I've learned. Let me come back here to ARK now. I haven't forgotten you with ARK, but ARK's become sort of boring. Higher high, lower low, sort of stuck at the 100-day average, momentum flat. There's really nothing going on right there. In XLI, which is our industrial sector, you've been in a bear trend where you finally got down to the 200-day average in the lower Bollinger Band, and that's where the market is looking for its support. Working against the market is the fact that you're what? Embedded. That's bearish. So I believe that the rallies in the market are getting sold. And I think the pros will come out if the red line closes over 21. It's at 13. I think they're going to sell it fairly aggressive in the morning if they get a rally. In the semiconductors, we had our webinar today. I was telling people, and this is what I believe, charts are nice, but every now and then I do look at the fundamentals. When I see you can't build a car, other manufacturing processes away from automobiles that use semiconductors, there's chip shortages in places. So what does that mean? It means if you're a chip company, you have both pricing power and a built-in customer around the world that sees a shortage, they're going to keep buying. These aren't the markets. I understand they pull back on corrections, but at the end of the day, you get to those highs, you pull back. I think ultimately you keep making the higher highs. That's where the weekly chart action comes in. Here's something new. Let's take a look at, instead of PODX all the time, let's move to CNBC. There's different ones we can look at. This is the Amplify Seymour Cannabis ETF. And still in a downtrend. Now, there's some safe banking regulations that went through today that should be a boon for these pot companies. Let's see what it is. Go read about it. Google the safe banking in cannabis, and you'll be able to read the stories. The market today got a high of 1984. You got to take out 1986 to break this whole leg of this downtrend. It'll take it away from the lower highs, lower lows. That would not be bullish, but would end a leg of bearishness. Got it? That's very important. Then we go to the home builders, and today's data, okay, it's fine. The market's been in a corrective stance. It's making a stand against the 100-day average in the lower Bollinger Band. It has not thrown out buy signals for any of you doing that, and it's too oversold for the shorts, I think, to want to get involved in. We then look at the energy sector with XLE. This is what I call the psychiatry trade. What does that mean? It means I hope in your phone you have your psychiatrist number, because, Doc, I'm thinking of jumping out my window, but I'm in the basement, and if I jump, I'm only going to have to go up 2 feet. Got it? That's what happens. You go to the upper band, you think you're breaking out. You go nowhere. You go to the lower band, you go nowhere. You're going sideways. Guess what? Don't look at it for a while. Let it develop a chart pattern. Emerging markets. EEM, lower highs, lower lows. I had one gentleman write me, he didn't like the EFA. He thought this is better. You know something? Nothing wrong with changing our symbols. I'm not married to the symbols we had. We should rotate them. So I'm going to do more of that for you in this season. But even this was super bearish, okay? You can't get away from that. There's nothing friendly here. It's been in a bear trend. Oversold, gets down to the lower Bollinger Band. Hello, Ira, what should we do with the lower band? You cover all your shorts. You're not embedded, and you're trying to get a bounce in the market. GLD. I don't think today's action was good for gold. Now, GLD is different than the futures in this sequence. The futures had a settlement price at 12:30 p.m. Central Time every trading day. GLD trades until 3 o'clock p.m. Central Time. This got the benefit of saying and pricing in what already the Fed had said and the speech that Fed Chair Powell gave. It's still bearish. This market could be headed down here. It is oversold. There's no edge in it. And again, it's a disappointing market. How do you fight if we're going to go up on interest rates? You've already had your talk of hyperinflation here, right? 4%, 5%. Gold's not lifting on it. You had the Evergrande talk. Gold didn't stay up. Let somebody else own it. The gold miners, I'm still in the bear camp on. And today's action, you might go to that lower Bollinger Band again. You didn't have an outside day down, but you are in pressure. Too oversold for me to look at it in any serious way. TLT, well, the market's overbought. It's attacking the upper Bollinger Band. The trend is up. What do? Liquidate, liquidate, liquidate. Why? Because you're hitting that band. You're only going to stay over at 5% of the time. You don't have to follow what I'm saying. I'm not trying to guide your money. I'm telling you that using the simple tools up here, I'll tell you, buy, sell, liquidate, don't do anything. That's all it is. It's not a track record of any type. FXE, bearish, bearish, but outside day down. What does that do? Well, if you have an outside day down and you take out the high of that number, specifically the next 2 business days, Thursday or Friday, I think you're going right back to the 18-day average of closes. You haven't done it. It's bearish. You're oversold. The trend has been down. I think the pros came out here. Not here, here. We'll see what happens. You put that together, you're trying to come up with game plans. And one of the plans I have is I'm going to mix up symbols on you. That's what I want to do. And in the morning when I start doing my spiders for you this week, I'm changing them there too. So look for me to get more aggressive with this. It gets boring for me after a while. The futures I've been doing all my life, and you think I just like doing the same ones over and over. There's so much to choose from in spiders and ETFs that's what we're going to do. And remember, each weekend, I give you the long-term chart picture on the weekly charts. So at 9 each morning, I come out and I begin recording. This right now isn't accurate because I've added for you a few. You just saw the cannabis stock, Microsoft. I'm bringing things in, taking a few out. We'll update this in a couple of days. It's very simple for us to do. And then I'll keep them for a couple of weeks and then move on again. That's what I'm going to do. Why? Because we're in rotation. Why? The summer's over. Summertime to me is the boring period. The hot period is right now. Hot. Why? Traders are back. They're looking to trade. So between now and Christmas, you're strapped in. You're ready to go. And that's what I try to offer. Each morning at 9, I record. I'm through recording 9:17 at 9:20. I'm publishing shortly after 9:30. Give the market that first hour to work through the if you will, the institutional buying, the algo traders, then we're looking. Why else do I wait till 9? I want the government reports to come out. And most of the major government reports are over by 9 a.m. Central Time. How do you give this a try? It's simple. You're going to part with $8, $9 almost. You're going to get 24 videos for the month, each approximately 20 minutes long in length. You're going to get Monday through Friday, the daily videos. On the weekend, you're going to get the weekly video from me. I try to give you buy here, sell there, do this, specific as can be. give it a try. Go to our website under the word research. Everything's explained there, and if you decide to do it, it's right there for you. I'm Ira Epstein. Have a good day.